Wealth Master. It's a cryptocurrency investor report twice a week, straight to your inbox. Loads of value-packed information, plus a lot of free resources that anybody can come and enjoy and take advantage of. Last week, we did an overview on the Elrond ecosystem. We also did an interview with the team from Oasis Network, and we even talked about how to get into NFT whitelist. Free information, amazingly valuable information. Go and check it out using the link down below in the description. Now, let's go ahead and get into this topic, and let's start with the bottom is in, market's going to push higher in the not so distant future argument. Well, first, let's start off with this. We are right now at a critical line of support for Bitcoin. So during two major previous crashes, so this here in early 2021, this here in mid 2021, this price area between $28,000 and $29,000 was where Bitcoin found support and bounced higher. Now we can see in both these examples we did have a couple dips down into that area, twice here and 3 times here. The question is Bitcoin going to find support here? Was that it for the sell-off? Will this area hold as support once again? Third time lucky? I guess we shall see. Worth pointing out, though, that we could potentially see the price coming back down to just a little bit inside this box again before pushing higher, but still holding that area as price support. Interesting, too, we had a massive volume day for Bitcoin yesterday, and of course, the day before as well. So these are huge volume days in comparison to recent volume. As you can see, the recent volume has been absolutely pathetic. In fact, yesterday, the highest volume day, well, since the day before that, but that day, those last 2 days, the highest volume days since May of last year. So it's been a long time since we've had this much volume in the market. Yes, that's sellers, but it's also buyers. People were scooping up the dip here. So that is definitely something to keep in mind, that we did see buyers coming into the market. Very interested to pick up Bitcoin under or just around $30,000. A lot of people will be watching this $28,000, $29,000 level, front running those orders by buying at $29,700 or at $30,000 or $30,300. Now, these kind of big volume spikes do tend to come with potentially capitulation events. So that is something to consider in the argument that yes, we could be seeing Bitcoin bottoming out here. This is also an interesting one here for you. This is the RSI. So usually when we see the RSI showing an oversold signal on the daily charts, which is exactly what happened right here. When we see that happen, that means it's a buy signal. So buying Bitcoin on that oversold RSI most of the time works out pretty gosh darn well. Long term, obviously. We see that from the time of that oversold reading, very shortly thereafter, Bitcoin does tend to rally. We can see all the price rallies that happened after the RSI buy signals came in, the oversold signals came in here. Now, it is important to point out also that in many of these cases where we have our initial oversold reading for Bitcoin, the price can then languish sideways for days or even weeks, and we can even get slightly lower price points coming in a week or 2 weeks or 3 weeks, sometimes even a month or more, after the initial price sell-off, which is what we saw happen here, for example, as well as here. Even here back in 2021, initial sell-off got us down to like 29,000. A month or 6 weeks later, we got down to 28,000 before pushing higher for the price. That is something to keep in consideration. We could still see another test of that area of support for Bitcoin. Now let's take a look at the DXY, the US dollar currency index. It is coming up on a major area of price resistance. This is exactly where the dollar index retreated back in 2017. It's been stuck here for a few days now, trying to get up and over that area. If it retreats here, then I think that actually becomes quite bullish for Bitcoin, crypto, all the oversold growth stocks. We also see, of course, the RSI being overbought here on the dollar index. So very strong demand for dollars, massive dollar rally that's happened here over the last few weeks. That could be coming to an end as it fails to break past resistance and is showing very strong signs of being overbought. But just keep in mind that RSI can go higher, go up to 90, 95 before correcting, right? We could see resistance breaking and the dollar putting in a massive rally before, of course, cooling off. If that happens, that means that crypto stocks gonna get smashed. Absolutely. If we do see a retreat here, though, I think that's very good for the cryptocurrency markets. Now, final point here for the case of the bottom potentially being in. Hopefully, we have now hit peak inflation. Everybody's looking for the CPI data to come out tomorrow. If inflation did fall in April, and it's predicted that it's going down from 8.5 in March down to 8.1 in April, then I think we start looking towards recovery in the markets. That's where I think we start seeing the dollar starting to retreat. You know, the risk markets, Bitcoin, crypto, growth stocks, all this stuff starting to take a little tick back up as well. That's if we hit peak inflation in March. A lot of the market's looking towards that. So that will be, I think, the very important thing for us moving forward. Now, let's get into the case against the bottom being in, and that's, of course, the second part of our inflation conversation here. If the experts and the analysts are all wrong and that inflation has not indeed fallen, if we have not yet hit peak inflation, if April is either still at 8.5 or actually rises to 8.6, 8.7, anything higher than that, not going to be good. Markets, I think, will react very, very badly to increased inflation data, especially with so many expecting that the inflation has actually come back down, that we're in a peak inflation era now. Well, you know, that the peak is in anyway. So that's, I think, a major factor to keep an eye on. Also, if this fear does spread because, you know, inflation's too high, or just more craziness happens in the macro scene, and we know a lot of crazy stuff has already happened in the macro scene, keep this chart in mind. This is the NASDAQ 100, which Bitcoin has basically been dragging right along with for the most part, currently sitting on a massive area of price support. Very critical that this holds, in my opinion. If we lose this price support, there is not really any meaningful support until about 10% lower in price, and 10% down for the NASDAQ is not going to be any kind of good news for Bitcoin or your altcoins, which are probably going to go down another, 30, 40, 50%, something like that. That won't be good at all. So let's hope that the support does hold here. I think it's definitely at that moment where if we get more positive data, the dollar starts retreating, inflation has peaked, this starts going back up. If it hasn't, let's watch out, because there's a lot of empty air between here and there. Now, if we do get this, then we need to start talking about the 200-week simple moving average. This is that super important line in the sand for Bitcoin. The 200-week simple moving average right now is around $22,000. So while in a very bearish scenario where everything doesn't work out that we've been talking about, we could see Bitcoin wick under this, but you definitely want to see the candles closing back above it. You can see here back in the depths of despair of 2018, we held the line. During the COVID crash, we held the line, even though we did wick underneath it on the weekly candles. Worth pointing out as well, we have not actually seen an oversold reading on the RSI on the weekly here for Bitcoin, so that is still a potential reading that we could get coming in if all that stuff doesn't work out in our favor. We do see the markets taking on a lot more fear and panic. Now that 200-week simple moving average also lines up with basically our next critical zone of price support according to, the historical candles here. So if we go all the way back to late 2020, you will see that 22,000 becomes a very, very key place for price support for Bitcoin. Now, another risk in the market right now that could see the bottom not be in is the UST crash. Now, there's obviously a lot of work going on behind the scenes, a lot of fundraising efforts to try and bring the peg back for UST, which is one of the biggest stable coins out there. But I think a lot of risk still remains for UST, and even after it gets back to its peg, which I think it probably will, fingers crossed anyway, I think a lot of trust will be lost after this in the UST stablecoin. Also, tinfoil hat moment I wanted to point out. What if this has all just been orchestrated by the Treasury Department in the USA in order to bring in harsh cryptocurrency legislations? Also, the obviously highly scientific poll that I did over here on Twitter. Has the UST crash been a coordinated attack by bad actors? A lot of theories going around, but I think there's a good chance and a not super unlikely situation, to be honest, that we could have seen a major hedge fund. Many people are pointing the finger at Citadel right now. Whether or not it was them, different question, but definitely we can see a lot of on-chain UST did get sold, like hundreds of millions of dollars worth. So who was shorting the market? How much did they benefit? All this kind of stuff. So definitely a lot of people leaning towards this has been a coordinated attack on the UST stablecoin. They saw the mechanisms that they could trigger, the levers they could pull. They knew that once UST started crashing, that suddenly the Luna Guard Foundation would be forced to sell their Bitcoin into an already massively weak market, thus pushing the price of Bitcoin down even further, providing a perfect shorting opportunity. Some people, they just, what's the old saying? Crazy as some people will, crash the entire cryptocurrency market instead of just getting a freaking psychologist, man. What are you guys doing out here? I guess they're making billions of dollars by shorting the market, but damn, man. Damn, that's crazy stuff. Anyway, final thoughts here from Raoul Pal. He said the S&P 500 now very close to pricing in a near immediate recession. Expect growth stocks to collapse even further. Also, this here, the next great unwind is going to be for oil. If this line goes, then inflation expectations will fall. That's, of course, largely correlated to oil. So we could see an unwinding of oil, which will, definitely hit the commodity markets very, very hard. He said then we should see yields fall while equities, crypto, and commodities see a full liquidation over the next few weeks. So Raoul Pal thinking that we could still see a lot more pain coming in the market. If that is the case, well, then we see the NASDAQ down another 10%. Then we see Bitcoin keeping an eye on that 200-week simple moving average around $22,000. But anyway, there's the data for you. There's some of the charts that I am watching right now. What do I think? Is the bottom in? I have no idea. Man. I wish I could just say, yes, the bottom's definitively in. I think there's so much uncertainty and risk still remaining in the market, so many wild card factors that, I'm just going to keep stacking sats. That's my plan right now. Stacking sats. If we see the prices come back down, I'll stack some more sats. Prices continue to languish, crab market sideways, I'll continue to stack sats. That's my general plan at the moment for the cryptocurrency market. But what do you think? Was the bottom in yesterday? Was that it? Just a little dip under $30,000? That's the bottom. Or are we in for a lot more pain? And if you are in the we are in for more pain camp, what is your price prediction? How low is Bitcoin going to go? Are we going to hold $22,000? Or are we going to slam right back through that and go way down? Curious to hear your thoughts down below in the comment section. Thanks so much for watching today.